Since touching 54.97 on February the 11th, we've seen the FTSE bounce back over that 6,000 level. In fact, now trading around that 61.42 mark. Joining me to look at how to trade this is Steve O'Hare from PIA. Thanks very much for coming in.
You're welcome.
Where should people be positioning themselves in regards to the FTSE at the moment?
Obviously, since the start of the year, we've seen initial sell-off turning around nicely. A weekly bullish hammer was evident 3 weeks ago, and since then we've seen upward pressure. There's been a few trend lines that have been broken, downward trend lines, and this is positive for the sentiment, and FTSE seem to be pushing away nicely from these. Overnight and this morning we've broken 61.25, which was key, and now we're looking to really set longs, targeting some major Fibonacci retracement lines further on from last year.
As you say, we put the Fibonacci, you can see there on the chart, so where's the trend lines? For you, what are the important indicators to be watching at the moment?
I mean, the 61.8% Fibonacci, which comes in at 65.40 on the chart there, that's quite key. That's just above the congestion area of October, November highs. So we're looking at around, that comes in at around 6,500. So 6,500 to 6,540 is the target area. And a bigger retracement would be a 76.4 retracement, which would again take you back to July highs. So that's nearer 6,800. So holding and closing above these levels, the 61.25 level on a weekly closing date, then that's positive, and we should see further progression upwards from there.
Yeah, because I mean, a lot of the time you're working on very short time frames,
yes,
aren't you?
Yeah.
How easy in these markets is it to be looking out longer term?
Longer term is easier. It's the short term time frames. They're the hard ones to really catch because there's so much volatility, and there's little sound bites you get and news bombs, and that's the thing that can catch people out, and you can get caught up in the noise. So the more medium term to longer term time frames are sometimes ones you can rely on a bit better, especially from a technical
What would your tip be then in these kind of markets in terms of trading, emotions, skills, strategies?
I think the main thing from a trade perspective is to maybe, when we've got this volatility, is to cut down the size that you're trading, and that will enable you to have maybe a larger stop, so that you've got less chance of getting caught up in the noise. But at the same time, when you have a bigger stop, obviously your target has got to reflect that as well, and always be looking for a 2-to-1, 3-to-1 risk reward. So if you're looking at losing, or a stop is maybe 50, 60 points away, you want to be looking to make at least double, if not 3 times that amount.
So then finishing on this with the FTSE, where for you is your stop for the FTSE?
My stop for the FTSE would be, if we bring the chart in on this, it would be a weekly close below 61.25 would be ideal. And as I say, look at the close Friday night, and if we're closing well above that 61.25 area, then that would be, it would be quite a small risk, and then you can sort of like gradually trail your stop as we progress higher over the next coming weeks.
So Steve, there looking at the FTSE 100, you can see a number of his trades. They're available on Signal Centre on the IG platform.